And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Monday, August the 15th, halfway through August already. A lot of the schools starting already in my neck of the woods here, probably a lot of yours as well. My name's John. As always, thanks for trusting me with your time. As always, we're focused on context, risk management, and patience. I hope you had a nice weekend. Just for your information, today is National Relaxation Day. Always a good day for me. Economic numbers this morning, 7:30, the Empire State Manufacturing Index out. Not necessarily seeing a lot of reaction off of that. 9 o'clock, the Housing Market Index, which will be a little bit closer looked at. And we do have a relatively quiet week. Just to go over what we're looking at this week. Housing starts and permits tomorrow, industrial production. A lot of focus on the housing in the coming days and weeks here. Retail sales on Wednesday. Of course, petroleum status report on Wednesday as well. The FOMC minutes at 1 p.m. Central on Wednesday. Thursday, we've got jobless claims as usual. Philly Fed existing home sales. A lot of focus again on homes this weekend, or this week. We've got leading indicators also on Thursday, nat gas on Thursday as well. And then Friday, really nothing really. We've only got a couple of talking Fed scheduled to speak throughout the week. So we've got some information due out this week. Nothing all that impactful. We had stocks ready to open lower this morning, kind of citing China's slowdown as an overcast of the world economy. A lot of retail sales we'll be looking at this week as far as a lot of retail companies announcing earnings this week. Tomorrow we have Walmart and Home Depot. Wednesday, Lowe's, Target, TJ Maxx. Thursday, BJ's Wholesale and Kohl's. And Friday we've got Deere and Foot Locker. So a lot of focus on retail in earnings this week. Crude prices have dropped, if you hadn't noticed, overnight. Apparently, on Iran's apparent readiness to compromise to revive the U.S. plan to lift some of the sanctions. Yes, we have FOMC minutes on Wednesday at 1 p.m. Central. As always, if you like what you see, make sure you hit the lucky like button. Share, comment, question, comment, feedback, heckling, and love are always welcome. Anything we can do to improve the forecast or anything we do here is greatly appreciated if you'd let us know. This morning, the VIX is up about 7%, but still just over 20. 2087 last I looked. The dollar index up slightly at 106. The yield on the 10-year down slightly at 2.78%. All right. We do have group coaching today at 1 p.m. Central. Here's the link to sign up. Tomorrow, of course, we're going to be having Make Hogue Money again. Tomorrow, right after the market forecast. Here's the link so you can join us in our Zoom meeting, so you'll have the opportunity to chime in and you'll be able to vote for some of the trades that we're thinking about taking. Of course, we're going to be broadcasting that on YouTube again. We're going to see how that goes over time. And as always, I got to check in with everybody. Dario, first one in the room. You win the prize today, Dario. I haven't seen you up there before. It's good to have you here. Shaw, good morning. Orion, good morning. My brother Rick, love you. Tachyon, Theo, Scott, Sawney, Concord, Patrick, Marcelo, Dimitar, Serenity Trader, good morning, sir. Brian, Pete, Bill, Brody, Terrence, Alfred, Dead Letter Opener, George Duke, good to see you. George, good to see you. Lacey is is, yes, the center of the universe. She's up by the front door just watching the Fords go by right now. Dan Trader, good morning, everyone. The Scarlet Arachnid, good to see you. Rusty Golfer, my spirit animal. My son played a little golf this weekend. He said it didn't go too well. He got himself some new clubs, so he's got a little bit of adjustment to make. Dr. VJ, it's good to see you. Unicus, quote for the day. It's not the mountain or the market we conquer, but ourselves. Sir Edmund Hillary. Very good quote there, Unicus, and you couldn't be more correct about that. Sizable interest in open interest on Friday in the E-mini S&Ps. Yeah, over right around 36,000 on that big push to the upside. We're going to see that in the charts very shortly here. Yeah, it's a nice dip in crude. I'm hoping to see that at the pump, right? Jules, the rooster, dead letter opener. No guidance might equal profit taking. Patrick, you probably said it. Yes, FOMC minutes on Wednesday. Good morning, Vlad, Jen R. Sarah Hall, good morning. Prayers and love to you as well. And Nisa, good morning. Columbia, Vlad, Trading Research, Sunil, Brian, Jimmy, morning. DA, Steve Frischman, Three Lions, Sunil, good short trade on this morning on the S&P. Good job. And Charles March, good to see everyone this morning. Again, if you like what you're seeing, hit the lucky like button. If you don't like what you're seeing, email me, jhoagland@topstep.com. Let me know what you're looking for as far as information here on the market forecast. Good morning, Adrian and Dark Heaven. Good morning. All right. Again, I hope you had a nice weekend. I hope you're rested and ready for this week. There's always challenges every week and every time we enter the markets environment. We have to be prepared and we have to be at our best. We have to have our knowledgeable trader right up here in the front of our heads, and we have to be patient and let the market tell us what it's going to do. I can certainly have a bias as well as everybody else, but when I find that I just take what the market is telling me and be patient, let the market find its levels for me, I tend to do much better. So it is National Relaxation Day, and I'm going to take that, and I'm going to relax this morning. Mondays are not typically my best trading days, or periods of time anyways, so I'm going to take it easy and wait for the market to give me something. I believe the markets are telling us what they are trying to do. It's up to us to take that information and use that to our advantage. Every time I enter the market, I say out loud, is this in my best interest? Is this in my best interest? Keeps me away from a lot of those impulse trades, and a lot of those FOMO trades, and a lot of those revenge trades. Just asking myself if what I'm about to do is really in my best interest. Suggest trying that yourself. All right. E-mini S&Ps. Coming off the highs a little bit here. Let's take a look. So here's the daily in the S&Ps. We had some pretty decent volume slowing on Friday on a push to the upside here. It was pretty slow in New York as well. We had under 4 billion shares traded. So the market really kind of slowed on this big push to the upside. This kind of blow off top here did provide a late spike. Open interest, we still saw money coming in. 36,000 increase in open interest on Friday alone. That's pretty big, but the volume was not all that impressive. So the upside structure, the paradigm that started on this Tuesday, still is intact. Looking for a little bit of a pullback today, perhaps. But we're still inside extended trading hour range and regular trading hour range from Friday. So there's very little change in the perception of value of the S&P at this time. We've got overnight inventory to the short side. We opened here. We're trading here, seeing some continuation lower after that Empire State Manufacturing Index, which I didn't really look at it too closely this morning. I want to see what it came out at. Wow. Pretty big miss. They were looking for 5.5, came out minus 31.3. That's not good news. Not good news at all. So we are seeing some, I believe, response to that information here as the S&Ps continue to move lower. We did have a late spike on Friday. And where did that late spike start? It seems like it almost started back here around 11:30, maybe even in the morning, because this market just really pushed higher all day long. And if you've ever heard a colloquialism or a cliche about selling the S&Ps on a Friday rally, don't do it. We learned that again on Friday. This market just continued to grind higher, eating shorts, actually increasing open interest to the upside. We trapped some new longs up there. So here is a picture of the late spike on the TPO chart. Oh, well, we were going to try and have that. Where did we go? There we are. So we have, a degree of balance, or do we? I mean, we have single TPOs here. We have single TPOs here. Where did this late spike begin? Like I said, it's almost like it started at 11:30 when EF period. We got a little balance here. We got IJ period. Is this where it really started? J period, K, L, M. Typically, M period is what we consider the late spike, but because this market was so imbalanced early in the session, it leaves me wondering where the base of that late spike is. Remember the late spike rules. The late spike rules state if we open above the late spike, it's acceptance of higher pricing. If we open in the late spike, it's questionable. If we open below the late spike, it's rejection of higher pricing. So the way it looks now, it appears as though we are showing signs of rejection of higher pricing, especially with this recent move back to the downside, back inside range and back inside value from yesterday. So it's telling me I can probably be patient and wait for better trade locations as the day goes on. I'm not thinking that this is going to be some major turnaround or anything. I'm viewing this as a potential opportunity to find a weakness with which to buy. We've got our naked point of control from Friday. We've got the gap down here. We've got another naked point of control down here. There could be a pretty decent pullback here. I'm not expecting that, but I'm going to try and stay patient, wait for some sort of structure to be created in the day time frame today. Initial balance. Maybe that's the structure I'm going to look to hold and to trade on the extremes of. Would sure be nice if the initial balance took us back down to naked point of control from Friday or value low, because that also gives me another opportunity to limit risk. So, without any further bad news, if we don't crack this thing and the market just kind of bides time throughout the session, we're going to end up with a short time frame community of traders that are going to be too short at some point during the day. Now, that's if we don't crack this thing. If we just really kind of hang around, traders have short memories. If nothing new and that's kind of bad, no bad news, the market tends to grind to the upside. Look at the grind it did on Friday. No bad news. That's what happens. This market eats shorts and has been eating shorts for 30 to 40 years. So be patient when we're inside value on the open here this morning. I'm expecting better trade location as the day goes on. Here's the crude oil. So we got a big push to the crude oil. We got a big dump here, testing weekly kickoff low as we open, looking below it. It is rollover week, which is going to make it a little bit more difficult for the market to remain directional for a long period of time. Most of the time during rollover, our longer time frame traders want the market range bound so that they can work their roll to their advantage. They do the roll right, they can make money on it. Do it wrong, they can lose a lot. And range bound markets make it easier for them to make money in it. So we've got this possible increase in supply from Iran. It's opening and testing weekly kickoff low as we speak. Take a look at the 30. So here's our big dump to the downside. Do you think we've got a few short time frame, weaker hands shorts in this market? They're looking for the market that is now open to bring in more sellers to the downside. If that doesn't happen, we could see a pretty substantial push in the opposite direction. And you can kind of base that opportunity right around weekly kickoff level here. We've got last week's low. We've got weekly kickoff, which is a weekly kickoff now and in the past. You're starting to see those short time frame shorts getting a little bit nervous. It looks like the opening range is the low of the session here, and it's a big one. Look at this. This should be showing us, but the low of the opening range is 87.16. The high of the opening range, 87.67. So we're looking at 52 ticks of risk in the opening range. A little bit too rich for me. We may come back and see how this goes. Nasdaq. Similar, but different to the S&Ps. It's its own market. But again, we had volume slow on the upside on Friday, but we did add 7,100 in open interest. So both the S&Ps and the Nasdaq brought in a whole bunch of new buyers on Friday to push this market higher. It wasn't just eating shorts. It was bringing in new business. New business and indicates potential continuation. Upside structure still intact. Here's the 30. Settlement is up here, 13,577.75. Overnight inventory short. Inside value, inside range from yesterday. Oh, you guys get tired of me hearing me say this, but I gotta stay patient. I'm gonna be looking for better trade locations as the day goes on. We looked last week during the group coaching session, how often in the S&Ps, one side of the initial balance, which is the first hour of trade, remains an extreme for the entire session. We went back 20 days. 19 out of 20 days had a initial balance extreme as the high or the low of the regular trading hour session. The extremes of the initial balance, there's money there. One way or another, there's money. So be patient when we're in range, we're in value. There's a little bit of possible repair that may happen here on the Nasdaq. I gotta chill. Remember, it's National Relaxation Day, so relax. The best trade locations are likely to come after the open, as the day goes on. Take a look at gold. This might be kind of coming back off the back burner for me as far as a product that I want to trade. Attempts to continue higher have met with low volume. We did add 1,200 estimated open interest on Friday, but we couldn't put in a new weekly high. We couldn't take out the high from the couple of days ahead of that, before that. Probably not good news. We probably trapped some longs on Friday. We do have a break in structure that kind of occurred on Thursday. Friday, we tried to get back above it. Couldn't take that out, the high out last night. And now we've got some selling coming in with the dollar creeping a little bit higher. Here's the 30-minute chart. All right. Overnight shorts, you think? Settlement's up here at 18.15.50. All of these overnight shorts. We still have a naked point of control down here that's yet to be checked in regular trading hours. No, maybe it has been checked in regular trading hours. But we've got this gap here. We've been unable to close the gap, which says to me, well, if we can't close the gap early, the gap rules say we look for opportunities to sell strength in the direction of the gap, which has us looking for shorts. Not really seeing any good areas here where we might find some fish hanging out. So I'm going to try and stay patient. But the fact that there's a possible change in market state here has at least taken gold off my back burner. We've already seen prior to the open a little bit of an inventory adjustment to the upside. Still some sellers hanging around here. We're setting up a little bit of balance, which may give me opportunity near the extremes of this area of early balance. Looks like we've got a pretty weak low down here at the bottom. The euro. Boy, we have certainly trapped some longs up here. Now, if you remember, we had the weekly kickoff level, which was right around here, 36, 31, 36. 031, 35. Around here was the weekly kickoff high. We broke out of it the end of last week. We just barely moved point of control or the weekly kickoff higher. We looked above it and we did not find any buyers up there. So we used up all our buyers to use up all those sellers up. We got them a little bit on the rocks, and now we've really just fallen back against them. I'm afraid we've got a whole lot of weak longs stuck here, taking us to the other extreme of balance. We're kind of centrally located in weekly kickoff levels. It's going to be kind of a tough day today for us. We know we have overnight inventory to the short side. We have had those longs give up. We lost 4,200 on Friday in open interest. That's all these cheap, late to the party longs up here bailing out. Now we've got the longs from the breakout above this area, which are now freaking out. They're down money. Take a look at this. Big up move, can't close above it. Big up move, can't close above it. Friday, we come off, we lose a whole bunch of open interest. I would suffice to say that we're losing open interest now, and look at all the weak structure that we left down behind here. Naked point of control, naked point of control, naked point of control. We're going to take all those out today. Last week's low right here. This might be an interesting opportunity for us at last week's low. Yeah, what else do I have here? Gap rules, of course. We've got a gap, so we can't close the gap relatively early. It's marking acceptance of lower pricing. We should be looking for opportunities to sell strength. And the 10-year, interesting situation here. We're still holding upside structure. Now, this trend line was only two touch points. Not a very strong trend line. So the market is still attempting to maintain upside structure, even with rates going higher. We lost 11,000 in open interest off this low here on Friday. I find that interesting. Volume has been just getting crushed over the last couple of sessions. It's almost like nobody cares. Check out the 30. So, do we have some overnight longs in this market? Perhaps. Looks like they were, kind of short here. I would say they're probably long, but they're still in range and in value. We've got a high volume node here. We've got a high volume node here. We're in the area that would bode for repair from Thursday's session. But again, we've opened with a gap, and if we can't close the gap relatively early, we'll look for this market to come back into and perhaps reaccept inside of this channel. The nat gas, we looked at this cup and handle. We were looking for continuation that just could not happen. We tried on Thursday. We tried on Friday. We added another 3,200 in open interest, but on very low volume, on a feeble attempt to get above that level. Now you can see this market is kind of coming off. The thing about the cup and handle, if it's a very smooth, rounded bottom of the cup, it's much more friendly towards continuation above the rim of the cup when you break out of the handle. A V-shaped cup is less likely to provide a big upside opportunity. So, we are going to take a look now at the 30. Overnight inventory, a little to the short side. We've opened with a gap. Gap rules. We've got plenty of visuals down here, back inside of the handle of the cup and handle, with which to look for opportunities for the market to continue to push down to. And it is continuing to try and to push lower. This market is wild. I'm of the school of thought that if you're a market profile person, if you're a market profile trader, and you've got some good skills and experience at it, that you can take the market profile and adapt it to just about any market. Because after all, markets are really just never-ending two-sided auction processes that occur in infinite time frames. You should be able to kind of adapt those skills to another market. The only one that I seem to be really struggling with the ability to do that with is the nat gas, and of course the Nasdaq, which gives me heart palpitations. So, I believe that to be true. Once you have an understanding of the auction process and how to look at the auction process through the lens of the market profile, you're going to have, I think, a better understanding of how each individual auction process in each of these products is going to be working. Doesn't seem to be making it any easier in those two markets. So, Serenity Trader, what we looked at in the group coaching session, I think it was on Thursday, we went back and we looked at the TPO, regular trading hour only, TPO charts for the E-mini S&Ps. Okay? So when you look at this light blue line here is the initial balance. It's telling us the first hour of trade. If we go back and we look, we're going to find on day session only that 20 out of 21 days, one side of the initial balance remained either the high or the low for the entire session. When we look at Friday, the low of the initial balance is the low of the session. When we look at Thursday, the initial balance high is the high of the session. The low of the session, the high of the session, the high of the session, the high of the session. Here's the one day where it didn't work. Well, yeah, actually it did. This is the high of the session. There is a day here where it doesn't happen. The low of the session, the low of the session. The low of the session, the low of the session, high of the session. Here it is. Okay, here's the initial balance. Here's the one day out of 21 where it didn't. Where the initial balance was neither the high nor the low of the regular trading hour session. Oh, thanks, James. We can't see your charts. You're better off looking at the charts. Let me try that again. So when we are looking at these TS Trader profiles, this light blue line is the first hour of trade. It's the initial balance. So if we go back, we can say, okay, that's the low of the initial balance, the low of the session, high of the session, low of the session, high of the session, high of the session. Whoops. Low of the session, high of the session, low of the session, low. Here's the one day it didn't. No, actually, this is the low of the session. That's not the day. Low of the session, low of the session, low of the session, high of the session. Here's the one day it didn't. So it looked, here's the high of the initial balance, here's the low of the initial balance. First, it looked higher, extended the range a couple of times, looked lower, and extended the range below. So normal variation day. High of the session, low of the session. You can go back and you can look for months and weeks. You're going to see similar information. The opening range and the initial balance ends up being one extreme or the other with an exorbitant amount of times, of probabilities. Damara, you should have been seeing my screen there. Yeah, see, it's not that easy. In other words, try and trade early in the dominant direction of the trend. But until the initial balance is established, we don't know the range of the initial balance. It's a good thought. You got it. All right, let's take a deep breath. Stay humble, grateful, and creative in your trading. Looking forward to seeing everybody for group coaching today at 1 p.m. Central, and then again at the recap. The recap is pretty casual. We just kind of look through the charts, see what happened, take a look at what happened on this day in history and music and in life, and take a little bit of relaxing time together. So I look forward to seeing you there. Again, if there's something that you're missing in the forecast or any of these things, let me know. If you love it, let everyone know. Get out there and profit today. I'll see you in the proverbial trading pit here in just a couple of minutes. Trade well, and I'll see you for the group coaching session at 1 Central. Trade well.